Hello everyone, I'm back and this is the last section. What we are going to do now is we are going to learn what happens when we record a payment of the trade receivables, i.e. your customers finally paid you. So usually your business will receive payment from your customer for your inventory if it's sold on credit, and your customers can pay by cash, your customers can pay by check or a bank transfer. So again, the colors are different because the accounts are different. Want to make a guess what the account is for when what the account is used when your customer pays by cash? Yeah, you are right. Usually we will use definitely all the time. If your customer pays by cash, we will use cash in hand. But when your customer pay by check or bank transfer, we will use cash at bank account. All right, and I'm going to just look at a transaction. What are the accounts affected? So when you sold your inventory on credit, with regards to the selling price, you will record a sales revenue plus and a trade receivable plus, right? This is what you learned in the previous lesson. So what happens when your customer pay you? When your customer pay you, you receive a cash in hand or cash at bank, depending on whether it's a cash payment or a check payment. And these two accounts will increase because you have more money. Yay! You have more money, whether it's dollar and notes or whether it's money in your bank account. Now, what is the other account affected then when there is a payment by your customer? You see, previously your customer owe you, that's why you recorded trade receivables plus whatever amount. Now that your customer has paid you, there's no more trade receivables. There is no more trade receivables. Doesn't owe you any more money. So this trade receivable plus here, you cannot record it anymore. You should record trade receivables minus a deduction of the trade receivables. All right, so you reduce your trade receivables and say, customer, you don't owe me money anymore. So I let you take a look at the accounts here, the star accounts. Okay, the key point, trade receivables went down. So let's take a look at an example. Receive $4,200 check for inventory previously sold on credit. All right, so it was sold on credit. So you know that this is a trade receivables. There was a trade receivable hanging around in your accounts. And now this trade receivable paid up. And since this trade receivable paid up using a check, we will record cash at bank plus 4,002 under asset plus. The other account is the trade receivable no more already. Why? Because this person doesn't owe you money anymore. If the person doesn't owe you money anymore, you should record an asset reduce. All right, your assets reduce by 4,002 because this trade receivable doesn't owe you money anymore. Okay, so I remove all the marking and you can have a look at the slide. Think about it. So we see, does the whole accounting equation balance? Right, that's what we always worry about. Yes, there's two accounts affected, but does A equals to L plus OE? The answer is yes, because asset plus 4,002, asset minus 4,002, asset 0 equals to liability plus OE, also 0. Everything is fine. Let's take a look at the next transaction. Pay credit supplier Jackson $1,500 check for inventory previously purchased on credit. So how do we record this again? Now this is a check, right? Since this is a check, you cannot use cash in hand, you use cash at bank. And your customer pay you a check, you have more. So why don't you try the next activity on SLS? All the best.